Hey everybody, my name is Joe Pivarunas. I'm the founder and managing editor of Nanalyze. We're a boutique media and research firm that covers disruptive tech investing for a broad audience of retail and institutional investors across the globe. Today we're going to talk about a company called Quantum Computing Inc. And the title of this slide, it says, not a good stock. Now, I want to qualify that a little bit by saying, firstly, the reason we wrote about this company is because if you're a newbie investor and you're looking to invest in quantum computing and you put in quantum computing stock into Google, like many do, this will pop up. So clearly, the stock that bubbles to the top gets a lot of visibility, and we wanted to take a look at it. And when we say not a good stock, second thing that newbie investors will do is they'll actually ask Google, is Quantum Computing Inc. a good stock, or is QUBT a good stock? And no, it's not a good stock. And we're going to talk about why that is today. So we started out by publishing a research piece on this company, and as we rightly predicted, we were met with loads of criticism. And you can go to that research piece, we'll put it in the description of this video, and you can read some of the comments for yourself. And I've cherry picked a couple here. Well, the first one is about only reviewing SEC filings. So they would say, I expect you to do more research than just reading SEC filings. Well, that's our methodology. So we've been doing this for decades, looking at companies and analyzing them for red flags and investability from the perspective of risk-averse investors. And that's exactly where you go to look, is in the SEC filings. Most investors don't. Everything that isn't in the SEC filings is all marketing collateral and is all meant to appeal to investors. And no company management team wants to spend time at the pen. So they'll make sure that they tell the SEC everything that they need to. And that's where you'll find a lot of good information. Somebody else raised a point that this gentleman over at a company called Ascendient had initiated a coverage on this stock with a buy rating of $11 price target. We'll talk about that. And of course, we got a lot of the useless banter. We shouldn't research anything ever again. So we decided we'd publish this video and touch on the stock. Now, we took a look at the report published by this analyst, and it says, of course, we may have a business relationship with companies covered in the report, so that's useless. It's a conflict of interest. Um, and when they talk about an $11 price target, this is quite surprising coming from somebody with a CFA. So what this gentleman has done is he's taken the present value of a perpetuity. So it appears that's what he's done. It's just $1 million off from what he's done here. So if estimated annual profits every year are $65 million, it looks like he just pulled that out of his ass. And then he applied a discount rate of 20%. Who knows why? And then he calculated the net present value of that future stream of cash flows. And if you do that yourself, we've done that with a perpetuity calculator, comes out to 325 million. Well, his comes out to 326 million. And then he does some other hocus pocus, divides that number by the shares outstanding, and comes up with this $11, completely useless. So what had actually happened when we published that report, I believe the stock kept falling, and it's somewhere around $2 a share. We'll talk a little bit more about that. Now, what you need to pay attention to in the SEC filings you should be looking at, for example, are the shares outstanding. So this company had around 4.7 million shares outstanding in December of 2018. Just 3 years later, the number is all the way up to 28 million shares. So you can see they're issuing shares left and right. We see that quite a lot. It's a big red flag. Companies will do that for a lot of reasons. Now, what are the effects of that? Well, first of all, they're not quite noticeable. So most retail investors won't pay attention to things like this. So if you look at the price these shares traded at in December 2018, they closed at $2.85 a share, which would have given the company an implied market cap of 13.5 million, roughly. All things being equal, when you take into effect that dilution, those shares today would be worth 46 cents per share. So why are they trading at $2.18 a share today? Well, you can look at the amount of effort this company puts into investor relations. And when you see that, that's another red flag. And you can just read these for yourself. These are all the shares they're issuing to various investor relations services. And you can see here that they're actually creating dilution in the process of getting exposure to their stock. We won't use the term promoting, but there's a little difference between promoting a stock and using an investor relations firm that will do things like pay companies to produce reports with $11 price targets. So when a company spends a lot of time and energy on investor relations firms and consultants, that's a huge red flag. And this sort of activity will help support the price while they issue shares and continue issuing shares to pay to conduct their business. Now, another problem we came across, we were looking at this firm, is that, if this is a quantum computing company, technology is a critical component of what they do, and the CTO better be one sharp cat. Well, in 2018, they brought a CTO on board, paid this gentleman $670,000 to an entity wholly owned by the same gentleman. Conflict of interest, right? You don't do that sort of thing. That's just not, you know, of course, they have to say that in the filings, right? And that's why we look at SEC filings. So then this gentleman resigned, and then months later they realized it was unusable and wrote off the entire value of this $670,000 that the CTO collected to his wholly owned entity. They then took him to court, and the outcome was a settlement, which is unknown. Now, we had questioned in the article that they had brought on a new CTO in 2019, but that role nor the CTO's name was mentioned in the latest 10Q or 10K. And people had responded and said, well, here's a press release that mentioned that they brought this individual on board. Well, that's why we look at SEC filings. We don't care what the company tells the public. We look at what they tell the SEC. And recently they told the SEC that they now have another CTO who was previously on their board of directors, resigned from the board of directors, and has now taken the role of CTO. Now, you have to ask yourself just how much credibility you give this CEO in his ability to be able to choose a competent CTO, and why they're having to choose a different CTO every several years is all highly questionable. So this company, as you probably have already guessed, doesn't have meaningful revenues. In the world of quantum computing, an extremely sophisticated domain, a proxy for traction and progress would be meaningful revenues. Now, when we look at this firm, here's a stock price chart. The arrows point to what we would call the hype cycle. So, some people would point to this as being a pump and dump. Well, that's very tricky to say. You can't prove that sort of thing. Does it really matter if it's a pump and dump or if it's an incompetent management team? No, in the end, you end up being a bag holder. So since we wrote our piece, which we were chastised to no end for by a variety of unsavory individuals, that share price is down 71%. Now, what will happen typically is now it's trading at $2.18, and then maybe we'll have another investor relations campaign. It'll trade up to $6 or $8 a share. All these same individuals will come back and say, see, you're a bunch of morons. Then it'll go back down to $1 a share, and the hype will continue over time. This cycle that we continue to see as the number of shares outstanding continues to increase. So this analyst has said that they're expecting $2 million, which is a paltry amount of money, for 2022. So watch for that. If that's what's being predicted, that's what you should expect and hold the company accountable. But watch for related parties. So we see this with firms like Ginkgo Bioworks has some related party action going on. Some others do as well. Amyris would be another, where those things can be quite tricky, where perhaps you might create a company, fund the company with $100 million, and then they subscribe to your product and just give you the money back in the form of subscription revenues. That's an example of how related parties work. And IonQ, another quantum computing company, is also to be watched for related parties. And we'll talk about that in a second. So be wary of companies that have these hype cycles and a great deal of volatility around their share price. When there are red flags, you don't waste your time. You don't try to justify them. You don't make excuses. You move on. And there are lots of things to move on to. So the four big tech giants you see here, Microsoft, Google, IBM, and Honeywell, are all making great progress in quantum computing with billions of dollars invested. We've listed just a handful of the startups we've covered over the years. We've been watching this domain quite closely. We're very excited about the potential of quantum computing. We're not overly excited about the publicly traded stocks. Aside from the one we're talking about today, there are three others. You have IonQ. Again, we're looking for meaningful revenues with all three of these. Promising company, no doubt. just as risk-averse investors, we're not interested in the company until they show meaningful revenues, and they're not. Rigetti, same thing, and D-Wave. We recently looked at them. There's a video we published on that. Not impressed. We had high hopes for D-Wave over the years, and what they showed us when they had their IPO was just not that impressive. So, in the form of revenues, of course. So, you also have a lot of startups that are getting funding. So, the sophisticated institutional investors that do this stuff for a living are investing in a number of European startups. We listed them out here. So, there's no shortage of money going into this space. Now, to conclude, just because the CEO of quantum computing previously resided over a firm that went bankrupt, and an individual who worked there is now the CTO, and his past track record of hiring CTOs probably hired the world's worst CTO back when he hired that individual who they gave $670,000 to a related entity. Just because he made those mistakes doesn't mean he's going to make mistakes going forward. But guess what? When we see red flags, we move on. We're not hurting at all for opportunities in the tech world in terms of companies with meaningful revenues, exciting technology. When you see any problems like that, you leave it and you go move on to something else. So, for those of you that seem to think there's some potential here, here are the numbers you're going to want to watch. So, Q1 estimate $100,000 in revenue, Q2 estimate for this year 200, then 400, then 1.3 million. So, expect to see those revenues. If you don't, you should ask that gentleman over at that research firm why they haven't hit those numbers. And while you're over there, you can ask him how he came up with the net present value of $11 a share using a perpetuity calculation. Just doesn't make any sense. So, go ahead and leave any comments in the comment section of this video if you have any questions or comments. We fully expect that a large number of individuals will come around. They won't watch the video. They'll just go, "You're short." We're not short the stock. We're not in cahoots with the competitors trying to bash them. There's no conspiracy theory here. We know that there's a great deal of interest in this company. We've analyzed it, and we think it's not a good stock. That's the conclusion we've reached. So, if you have points of contention to raise about the facts we presented in this video, please do so. But if you come around with the attack the messenger bullshit, you'll get blocked. So, that's pretty much it for this video. Thanks so much for watching. Make sure to subscribe to our channel. Leave your comments. Thanks so much for taking your time to watch this presentation.